Welcome to another edition of Zacks Rank Buy. I am Brian Boland. I'm the aggressive growth stock strategist here at Zacks, and I've got two more stocks for your aggressive growth radar screen. Let's jump right into it. All right, our first name is Duolingo. Duolingo. There you can see is the name. It's DUOL. That's the ticker. It's a Zacks Rank number one. That's a strong buy. It has got an A for growth and an F for value, and that's exactly what I'm looking for on these aggressive growth rank buys. I know that growth investors and value investors are inherently looking for different things. So when I see a big divergence in those style scores, I know I'm on the right path. All right, I think this is a beat right there. I can't really see it because the Zacks logo is there, but this stock has run from 160 to 280. Nice run over the last month or so. Obviously, Duolingo makes a mobile language learning platform. So you're going to go learn a language. Duolingo is your source. If you're saying, hey, I'm gonna go to France and I'm gonna learn to speak French, or as surrender, as Dave calls it. All right, so you can go see that. So what's going on? It's a $12 billion company. So a lot of people are trying to learn languages, trying to become multicultural. That's great. Good for you guys. Anyone trying to better themselves is a good person in my view. All right. But in the view of these stocks, we care about the numbers. Are you beating the number? And they are beating the number. They're beating it pretty handily. 18 cents, 27 cents. That's a big beat. This is where things took off. Well, I wish I figured this out a year ago. But with this is a good example, though. A good learning, teaching moment, if you will. Not that I'm a good teacher. But when the company has been running a loss and a loss is expected and they post a profit and basically we're going to flip the profitability, and I can't tell from the numbers back before, but we've gone to profitability and things really take off. And we can see what has happened over the stock. We saw the 160 to 280 move, even though that was just very recent. But building on that profitability, you're building here. So 6 to 26, 57, 51, found a sweet spot right in there. All right, how are estimates looking? We go up from 33 cents to 36 cents. We go down from 54 cents to 46 cents. But the full year, we're going to go from 174 to 187. That's up next year, 267 to 282. So we've got 3 up arrows, down move for next quarter. That's interesting. Maybe that'll move around. Let's take a look at the sales. And I'm telling you, a lot of people must be panicking learning other languages. I don't know. Maybe we're all trying to speak Chinese. All right, 38% top line growth this year, 28% next year. Those are still big growth numbers. 736 million to 900 and just shy of 50 million, 950, we'll call it. All right, how is your valuation? Well, your valuation is sky high. Those are some big growth numbers. So we're going to see, 151 times forward earnings. Asset slim model most likely here. I'm sure it's just a software thing. 16 times book, 19 times sales. Those are aggressively big, but so are, the revenue numbers for big, as I recall, 40% this most recent year. And margins, here's your story last couple of quarters here. Margins more than doubled from 3 to 7.8, and then kicked higher to 10.4. When you see that, you got revenue growth, margin expansion, you're going to get multiple expansion. This multiple is big. All right, so let's take a look at our chart. And, of course, you would have liked to have bought this a year ago, even at that 160 level, even though it did nothing, but then it's just shot up. But this chart is just moving. And you can see it is justified by the earnings estimate move. Big intra-line moves there suggest earnings growth. You have good earnings growth, you get good revenue growth, that stock is going to move higher. But that move of late is parabolic. So a little bit of danger in there for Duolingo, but still overall, the story is about growth, and I like it. It's DUOL, Duolingo. We'll learn another language. I'm so broke I can't even speak properly. That's a terrible joke. Okay, let's move on to our next one. AppLovin, I love it. AppLovin, it's the APP. and technology services. Okay, so it's a Zacks ranked number one, strong buy, A for growth, F for value. I screen these stocks to make sure I get that. Again, another big parabolic move here, 90 to 130. That's good recent growth. I like that. So what do we do, AppLovin, at a $43 billion market cap? Well, they provide technology platform to enable and monetize publishing apps. So I'm going to say that they make your apps for you, and they take some of the back end from. Who knows? But they definitely make apps. So we care mostly about the stock and what it's doing. The numbers tell the story. You're making money here across the board, and you're beating the number. And for some reason, I'm on the eraser tab and not on the marker. Okay, so we're beating the number consistently, and these are consistent beats, 21%. So, the numbers are definitely moving higher as we look at an absolute basis. So that's your story there. 30 to 49 to 67 to 89. So good absolute earnings growth. So what does that mean for estimates? Estimates are just going to be moving higher. You're going to keep on beating the number like that. 78 cents up to 96 cents. 81 cents up to 96 cents. 306 up to 346. 374 up to 443. Good growth in estimates there. All right, so let's take a look at the thing that drives the whole engine of everything. It's growth. We see 35% top line growth, $4.4 billion this year. It's a lot of apps. It's a lot of loving. Next year, 13% to $5 billion. Slight deceleration in revenue, but that is okay. $5 billion per year is a big number in sales. 38 times price to earnings, but we're growing faster than that. 44% is our most recent number. 53 times price to book. That is a big one. But again, very asset slim. 11 times price to sales. And how are our margins? Our margins go from 10% to 16% to 20%. Things are looking up. Let's take a look at the chart before we call it a day. Boy, you come out and then you miss and you miss and you miss and you bottom out, and things stop right there. We're going to stop missing right here. And after that, it's off to the races. Boom. I love it. Love it. It's such a stock. All right. So we got beat. And, we're expecting a beat. Your earnings estimate lines are moving in the right direction. That one is looking good. All right. So that's my two stocks for this week. It's Duolingo, and it's AppLovin, APP. DUOL is the ticker for Duo. All right, that's it for this week. Be sure to join me next week when I take a look at two more stocks for your aggressive growth radar screen. But until then, why don't you go to Zacks.com/promo, check out all of our latest promotions.